Hey everybody, Rob Maurer here, and today we have a couple Tesla updates to go through, although it has been a relatively quiet news period here again for Tesla. Seems like we're sort of in the doldrums right now as we head towards Battery Day. But aside from those couple of updates, we'll probably spend most of today's episode talking about Xpeng Motors as they prepare to go public on the US stock exchange. First, I want to talk about Tesla's ongoing build-outs at their multiple Gigafactories, which is a really nice sentence to say. Starting off with Giga Shanghai, Tasmanian today had a piece recapping the progress for Phase 2, which is the portion of the Gigafactory for Model Y production, highlighting how rapid the progress has been, I think relatively unsurprisingly, for Phase 2, noting that Tesla is really wrapping up on the exterior for that portion, and then adding their own speculation that perhaps production could start for Model Y in Shanghai in the next 3 to 4 months. I wanted to just share my thoughts on that because I have been expecting a relatively similar timeline. If we remember back to the first deliveries of the Model 3 to non-employee customers from Shanghai, that was on January 7th, 2020, and at the time Tesla officially announced the start of the Model Y Shanghai project. Of course, we already know with the Shanghai Model 3 that Tesla was able to go from groundbreaking to deliveries in under a year, so despite the fact that the Model Y program is a newer program overall for Tesla, I don't see much of a reason to expect it to take longer to develop the Shanghai production process for Model Y than it did for Model 3. My expectation is also then that Tesla would start production on the Model Y in Shanghai before the end of the year. Shifting over to Giga Texas, it was disclosed that Tesla paid about $97 million for the land that they'll build Giga Texas on. So for about 2,100 acres, that's roughly $46,000 per acre. I've seen some mixed thoughts on this, with people pointing out that land further away from the city center of Austin is maybe 5 to 10 times cheaper. So saying that Tesla overpaid for the land, but as with everything in real estate, it comes down to location, and this location being so close to the Austin airport and the city center of Austin is critical for Tesla to attract new talent and also to retain the talent that they have that will be working on building out this factory, as Elon mentioned in his interviews with Automotive News last week. So personally, I don't have any issue with that price. For some context, Tesla paid about $140 million for the land for Gigafactory Shanghai, but that was only 214 acres. So about $650,000 per acre, way more expensive than Giga Texas, obviously. And then for Giga Berlin, they paid about $48 million for about 740 acres of land, so $65,000 per acre. That's from interestingengineering.com. I haven't double checked that, but the point overall remains the same. The price seems pretty reasonable, and overall it's insignificant. If we think about what Tesla's going to be producing on that land, I'm guessing it's going to be at least 1 million vehicles per year. If those vehicles are $40,000 a piece, that's $40 billion in revenue. At a 25% gross margin, that's $10 billion in gross profit every year, meaning that $100 million cost for the land is maybe 1% of the annual gross profit potential. The cost is just completely insignificant. The location is much, much more important. To further illustrate that insignificance, that $100 million for that land, that is about 30 days of regulatory credit sales for Tesla. It sure is nice when your competition funds your factories. Next, just a couple of software updates. Tesla has begun to roll out more broadly its dynamic braking feature, which causes the brake lights to flash in the case of hard braking over 31 miles per hour or 50 kilometers per hour. In addition, if you continue braking to a full stop under those circumstances, your hazard lights will come on automatically and continue flashing until you accelerate or turn them off. So a nice added safety feature, I think, implemented in the right way. Personally, I think the brake lights that flash all the time are pretty distracting. So I like the dynamic nature here. Next is a follow-up to a previous Elon Musk tweet where he said that Teslas would soon begin to start to recognize on the user interface and visualize other Tesla vehicles. Twitter user @GreenTheOnly has found those models within the source code for Teslas. So it looks like Tesla already has the models built in for S, 3, X, and Y. And then Green also says that coming soon, though they don't have models yet, are ambulances, fire trucks, police cars, and quote-unquote construction. I think the Tesla visualizations will be really cool, especially in the case of the Cybertruck, and the other visualizations mentioned, very important for the case of full self-driving. Alright, next up today, I want to talk about EV maker Xpeng Motors. As I said, they are preparing to file for an IPO on the US stock exchange under ticker XPEV, so I wanted to give a bit of an overview on their business and how they compare to Tesla. I think most people are probably familiar with Xpeng due to Tesla's ongoing lawsuit against a former Tesla employee, claiming that that employee shared Tesla's autopilot source code with Xpeng. I can do more research on that if people are interested, but at least for today, I want to focus more on Xpeng's business, which they have also modeled very closely after Tesla. A lot of similarities here from how they present themselves on their website. The page scrolling there is set up identically. Even things as little as Tesla's autopilot diagram, the color scheme down to the color of the vehicle is replicated in Xpeng's diagram of their driving assist technology. They're even building out their own charging network, which they call superchargers. Xpeng's user interfaces are similar. There's just a lot of emulation throughout their entire business. They're really not trying to hide it. Their founder said that, quote, one of the reasons Xpeng was founded was because Elon Musk made Tesla's patents available. It was so exciting, end quote. And the founder seems to have a pretty extensive ownership history with Tesla vehicles. Anyway, in terms of the business, Xpeng was founded in 2014. Over the years, they've raised about $1.7 billion from companies like Alibaba and Foxconn. And while we don't know the valuation, it seems to be at least in excess of $3.6 billion. I would imagine quite a bit higher than that at this point, but still to be determined for the IPO. Xpeng has two models currently that are actually in production, the G3, which is an all-electric SUV, and the P7, a sports sedan, which actually just started production this May. The G3 is a relatively compact SUV. It comes with two battery sizes, starts at 147,000 yuan after subsidies, which equates to about 21,100 US dollars, goes up to 200,000 yuan for the higher range version, or just under $29,000 US. The two battery pack options are 57.5 kilowatt hours or 66.7 kilowatt hours. Xpeng lists the range on the NEDC test cycle at 460 kilometers and 520 kilometers, or 286 miles to 323 miles. However, as we talk about a lot, the NEDC test cycle generally leads to much higher range estimates than the EPA test cycle. The best conversion that I've found for that online has been 1.43 to 1, which, if that were to apply accurately to the G3, would lead to a range of 200 miles to 226 miles on the EPA test cycle. That doesn't mean that's what it would come out to be, that's just an estimate. There can be a lot of variance in how those convert over, which will come into play here when we talk about the P7. So the P7 is the newer one. As I said, it started production in May, and this would compare most closely to the Model 3, with a starting price of 230,000 yuan to 350,000 yuan, or 33,000 US dollars to 50,000 US dollars after subsidies, compared to the Model 3, which after subsidies in China starts at what would be equivalent to roughly 39,000 US dollars up to 60,000. So it does actually come in a bit lower in price than the Model 3 does, even though that base model does actually have a higher energy capacity with 70.8 kilowatt hours, and then the higher energy capacity offering has 80.9 kilowatt hours. Depending on the motor setup you opt for, that'll give you anywhere from 562 kilometers to 586 kilometers, or 349 miles to 364 miles on the NEDC test cycle for the smaller battery. And then for the 81 kilowatt hour pack, they list the range at 670 kilometers to 706 kilometers, or 416 miles to 439 miles. If we again use the 1.43 to 1 conversion, for the smaller pack that would lead to an EPA estimate of 244 to 255 miles, and then for the larger pack, 291 to 307 miles. Of course, neither of these are offered for sale in the US right now, but I think relatively decent range specs even under those conversion assumptions. Certainly better for the money than what we would see from something like BMW or Mercedes. And strictly looking at the range and efficiency at that price point, excluding everything else that goes into owning a vehicle, which is obviously important, those numbers do look relatively competitive with the Model 3. The problem here is the NEDC test cycle. So if we compare what Tesla states the range for the Model 3 at versus what Xpeng has, the Model 3 is listed at 445 kilometers to 668 kilometers. Now, if we convert that back to miles and to EPA, which we actually know from Tesla's US website, of course, instead of converting back at 1.43 to 1, Tesla actually converts back at about 1.1 to 1. Stating that another way, that means that displayed on the website in China, the range for the Model 3 is only about 10% more than what's shown in the United States, when in general, going from EPA to NEDC, you would expect about a 40% increase in the displayed number. So I'm not sure if Tesla would be displaying a more conservative number for some reason. I remember when the Model 3 first came out in the US, they actually understated the range to what the EPA test result was. So that wouldn't be unprecedented. Or maybe the efficiency decisions and optimizations that Tesla has made for the Model 3 don't mix as well with the NEDC test as other vehicles might. But as it stands based on the NEDC test cycle numbers that are listed on Tesla's website versus Xpeng's website, the Xpeng P7 would actually be a bit more efficient than the Model 3 and also carry a bit more range. So I think you can understand why I'm a bit skeptical of that. We do have a little bit of third-party data, though it is very limited at this point in time, from Bjorn Nyland, aka Tesla Bjorn on YouTube, who does a lot of this sort of electric vehicle testing, so I'll put a link to that video in the show notes. But in his medium speed and high speed testing, he did actually find the Xpeng P7 to be a bit more efficient than the Performance Model 3. So I do think that's pretty interesting and definitely an area that I'll be keeping an eye on for more information. As for production, it does seem to be ramping up relatively quickly. As I said, that began in May. For the quarter ended June 30th, they had delivered 325 P7s. For the month of July, that actually picked up quite a bit, and they delivered over 1,600 P7s for that month. That seems like a relatively strong ramp up for just the second or third month of production. About how they produce vehicles overall, Xpeng says, and I'm sorry, I'm going to butcher some of these location names, but, quote, "We produced the G3 through a contract manufacturing collaboration with HEMA, which has over 3 decades of automotive manufacturing experience at its plant in Zhangzhou, Henan province. The arrangement allows us to retain effective control of key manufacturing and procurement processes and product quality with minimal required capital outlay. In addition, we have built our own plant in Zhaoqing, Guangdong province. We started the production of the P7 at the plant in May 2020, and will also utilize the plant for future models. We are leveraging the manufacturing know-how and experience gained at the HEMA plant to quickly ramp up the Zhaoqing plant. The HEMA plant and the Zhaoqing plant have annual production capacity of up to 150,000 units and 100,000 units, respectively," end quote. So beginning with partnership, but now looks like they are more focused on shifting to doing their own manufacturing. We sort of see that mix present throughout their business. They have 147 locations. 100 of those are stores. Of those 100, 40 are directly owned and 60 are franchised. Then the remaining 47 are service centers. 4 of those are directly owned and 43 of those franchised. Then, as I said, they are building out a charging network similarly to how Tesla has built one out, and again calling it supercharger stations. They say that as of end of June, there were 114 of these stations with an average of 7 charging slots per station. And they say that 61 of those are operated directly by Xpeng and 53 are operated by franchisees. So again, sort of that presence of partnerships throughout. As for batteries, CATL seems to be their main supplier, and at least on the P7, they actually use a prismatic form factor versus Tesla, which would be cylindrical. And then they're using a nickel cobalt manganese chemistry. Xpeng currently has about 3,700 employees. In the first half of 2020, they've done about $142 million in revenue with a negative 3.5% gross margin. Obviously, that's not good, but it is quite a bit better than last year when they carried a negative 38% gross margin through the first 6 months of the year. Overall, though, the net loss in the first half for Xpeng was about $113 million. A couple other interesting tidbits here from the F1 filing. They did talk about market size and defined the mid to high end segment as a price range from 150,000 yuan to 300,000 yuan. They said that's expected to grow from 6.5 million units in 2019 to 10.8 million units in 2025. And that's just for China, and that price range in US dollars is about 21,000 or so to about 43,000. The last thing I thought was interesting was the filing talking a lot about the potential for subscription services. They talked about how that could be deployed for their autonomous capabilities, things like that. But specifically something I thought was interesting was the other premium features that they talked about. And they gave an example here saying, quote, "For example, we have identified strong customer demand for in-car music as our customers listen to approximately 2 hours of online music per day on the wheel in 2019, end quote. I thought that was a pretty surprising and interesting number. I would have guessed lower. And I'm not sure if that refers to just total audio being played, if they're counting all of that, or if this is specifically from a streaming music service that they offer. I also guess it probably depends on how many of these vehicles are being put into operation with a fleet versus to a personal user. Anyway, definitely some interesting stuff there. I'm sure there's probably going to be some animosity from Tesla followers because of that pending lawsuit, and I'm sure we'll just get a lot of comments about this being the China knockoff of Tesla, which, yeah, pretty much seems to be the case. But Tesla's got a pretty good strategy. That's really the argument that we make all the time, is that other automakers should try to copy that strategy. I don't really agree with how closely Xpeng is doing that in a lot of cases, but I do think there are some interesting things to keep an eye on here, and I'm hoping we can discuss those things. Alright, lastly today we have some news from Hyundai. They have decided to create a standalone brand for their electric vehicles, and that brand will be called Ioniq. Of course, the Hyundai Ioniq was a previous vehicle model from Hyundai, once hailed as being the efficiency king, though it had a small battery so it wasn't necessarily comparable to large pack vehicles. But Hyundai has had some success with both the Ioniq and then later the Kona. This new Ioniq brand fits into what Hyundai defines as their Strategy 2025, or their goals for the year 2025. They say that they want Hyundai Motor Group, which includes Kia and Genesis, to, quote, sell 1 million units of battery electric vehicles and take 10% share to become a leader in the global EV field by 2025, end quote. Important to note that that is a cumulative goal, not an annual goal, so by 2025, a million in total. and that is from Kia, Genesis, and Hyundai combined, which in total deliver about 7.5 million vehicles per year. So by 2025, they should deliver more than 30 million new vehicles in total. So a million sounds okay, but it's only about 3% of that total. So as always, wishing and hoping for our sake and for their sake that they would make more aggressive targets. But I do at least think that a pure EV brand can be potentially helpful for them, depending on how they actually choose to manage that business. All right, I think that will finally wrap it up for today then. As always, thank you for listening. Don't forget to subscribe. Make sure you're signed up for notifications as well. Also, make sure you're following me on Twitter at Tesla Podcast. And I'll see you tomorrow for the Tuesday, August 11th episode of Tesla Daily. Thank you.